What are closing costs? How much are they? If you're purchasing a home for the first time, you may have heard about closing costs and you don't know what to expect. How much can you plan for? Well, today we're going to break down exactly what closing costs are, who you're paying, what you're paying for, and how much you can plan to spend. The Symphony Group represents buyers and sellers, but today we're really going to focus on our buyers. Our buyers always want to know, what are closing costs, who am I paying, and how much do I need to save up to make sure I cover my own closing costs? And one of the big questions we get is, can the seller pay my closing costs? There are basically 4 components to a buyer's closing costs, and we'll talk about a potential fifth as well. Up first, we've got our loan costs. Your lender is going to have closing costs affiliated with the cost of closing your loan. There may be brokerage fees, credit reporting fees, flood determination fees. This is a section of closing costs that is going to pay your lender for the process of completing your loan. The second category is impounds. When you go to purchase a home, it's very likely that you're going to open an escrow account to accompany your mortgage. The escrow account is where you are going to save month by month by month toward your annual property tax bill and your annual homeowner's insurance bill. Those 2 items are collected in an escrow account on your behalf over the course of your 12 monthly payments, so that when that bill comes out, you've got the money saved up and you can pay it straight from that escrow account and not have to worry about, oh gosh, how am I going to cover this bill? Those impounds are needed at the closing table to set up that account, to make sure that there's money in that account to cover the bill. Our property taxes in this area are paid in arrears, so you're going to receive a bill at the end of the year for the year that we have had. So we want to make sure if you're closing on a home, say in June, that you have enough money when that bill comes out in November to cover the prior year's tax bill. Same would be true with property insurance. Now you're going to pay your property insurance at the closing table. That is in fact one of your closing costs, is the year to come of your property insurance. However, we also want to get you built up in that escrow account to have a couple of months reserves ready to go for when the next property insurance bill comes out the following year. So those are your impounds, setting up that escrow account so that you have money at the ready when those invoices arrive from your property taxes and from your homeowner's insurance. The next category of expense is going to be the government fees affiliated with your closing. The county or city where you're closing is going to have some expense tied to that closing process. For the buyer, that's probably going to be recording your mortgage with the county. So there is some recording fee. It's negligible, but it is definitely one of your closing expenses. Just a note, the seller also has closing expenses with the county, as they typically pay for the transfer of the deed. Our 4th category here is title expenses. The title company is often where we do our closing, where we are physically present for closing, and that title company is going to have expenses related to the title search that they've done, making sure that the title is clear, and then there are expenses affiliated with the closing itself, just simply the attorney that is present to do the closing and have the closing at their office. There's a cost to that. But the biggest expense with the title is going to be your title insurance. If you have a mortgage, the lender is going to require title insurance. And then as an owner, you can also elect to purchase title insurance. Both of those are one-time fees that are paid right at the closing table, so they are considered a closing cost. I mentioned to you, last but not least, would be this 5th category of closing costs. And this is sometimes handled by the buyer, sometimes handled by the seller, and that is the real estate broker fee or commission. So that is a piece of the closing cost. Oftentimes in our market, we see that on the seller side of closing costs, but it is absolutely a closing cost that the buyer could negotiate or elect to pay on their own behalf. So that could be a potential 5th category of closing costs. So what do these numbers equate to? What does this amount to for you as a buyer when you're trying to decide how much cash it's going to take to get to the closing table? The closing costs are not your down payment. Your down payment is simply that it is a down payment, a percentage of your loan amount paid directly to your lender at closing. It is an amount that you pay at closing. It is truly a cost you pay at closing, but the down payment is considered to be separate from your closing costs in those categories we just went through. So the total that you can expect to pay in closing costs between your lender fees, those impounds you're going to need, the government fees, and the title fees, that can run about 3% of your purchase price. Now that 3% is sort of a diminishing return, right? Because it's not 3% if you buy a $5 million house, okay? So it's 3% if you are buying a home that would be $200,000, $300,000. You could probably count on having to pay about 3%. As you get more and more and more expensive in your home purchases, it's no longer 3% because the fees don't really escalate as much as the price might escalate. Taxes and insurance can become more expensive, but those are just one of four categories. So it doesn't become 3% once you're buying $600, $700 million house, right? That number for you, if you're purchasing a $200,000 home, you're probably going to have $5,000 to $6,000 in closing costs that are going to be due at closing outside of your down payment. So if you're planning to make, say, a 5% down payment, you're going to put $10,000 down on your home. This would be an additional $5,000 or $6,000 that you'd be expected to pay at closing. So if you're purchasing a $200,000 home and you want to put 5% down, you probably need to plan on $15,000 to $16,000 that would be paid at the closing table. However, closing costs can become a barrier to homeownership. And we as an industry want to help you if this is the reason, if closing costs are the reason that you can't purchase a home. Now, there are all kinds of programs to help you with that down payment. There are state and federal programs, there are grant programs, there are even lending institutions that will allow you to make a zero down loan, or even loan products that are zero down loan products like a USDA loan or a VA loan. There are opportunities to get around the down payment, but we still have these closing costs, right? These closing costs that we can't ignore. They're literally fees that are paid to this entity and that entity. So we have to pay them. But they absolutely can be negotiated. In several cases, we can work out an opportunity for the seller to cover some or all of your closing costs. So we don't want the closing costs, this $5,000, $6,000, $8,000 fee that you have to pay at closing, to be the barrier to closing for you. So what are some of your options? Let's go back first to loan charges. When you are in the process of identifying the lender that you want to work with, ask them upfront what their loan charges are going to be at closing. What is the cost going to be to you at the closing table when it comes to cash at the closing table as the lender fees? Because this is something that every lending institution is going to have different fees around. And if closing costs are a concern for you, you want to make sure that you find the lender with the lowest closing costs possible. When we're looking at the section of closing costs that is impounds, obviously there's not much you can do about your property taxes. They are going to be what they're going to be depending on where you purchase your home. However, you do have the ability to shop around for homeowners insurance, and homeowners insurance is absolutely one of those closing costs, both the year up front that you pay at closing and the impounds that you're going to pay toward future years' collection of that homeowners insurance policy premium. So shop around as you're in the process of purchasing your home for the lowest price homeowners insurance that gives you the best coverage that you need. That will help keep your closing costs at a minimum. Another option to help you reduce your closing costs is going to be shopping around for title. Title expenses are part of your closing costs, both the title search, the closing, and those title insurance policies. Those policies can be expensive. They are just a one-time purchase, but you can shop around for that cost. So as you are choosing or identifying which title company is going to be your title company of choice for your closing, ask them what their costs are going to be at the closing table, because this, again, is an opportunity for you to find a title company with the lowest possible fees. Looking at each one of those three categories, and frankly, unfortunately, the government fees category isn't really negotiable. The government's going to charge you what they're going to charge you. But you can have some control over limiting the amount of your closing costs by negotiating the lending, your homeowner's insurance, and the title company fees. That's going to keep your closing costs as low as you possibly can get them. But if they're still not low enough, or you still need some help getting to the closing table, then one of the things that your real estate agent can help you do is when you make an offer on a home, you can ask the seller to cover a portion of those fees. The seller can cover up to 3% typically with a conventional loan, maybe even as high as 6% if you have an FHA loan. So that's an opportunity where the seller can contribute toward your closing costs. So maybe rather than making a lower offer on the house, You make a higher offer and have the seller contribute toward those closing costs so that you aren't out that liquid cash at the closing table. You can hold on to your cash and be able to use that for all of the exciting things that you want to buy when you purchase a new home, like curtains and a lawnmower. This, I hope, gives you an idea of what you can expect when it comes to your closing costs. Again, we're looking at a number that could amount to $5,000 to $10,000, depending on the price of your home, depending on how good of an opportunity you have to negotiate some lower fees from your lender, from the title company, and from your insurance company. And again, if you are working with a real estate agent, that can be a fifth closing cost category for you. But then that is often one that we do see the seller cover, especially in our market here in Louisville, Kentucky. It is common that the seller covers the expense affiliated with the buyer's real estate brokerage fees. Hire a real estate agent to help you navigate the process of closing, navigate getting the seller to cover some of these fees, identifying a lender who has lower fees, identifying a title company with lower fees. All of this can stem from your real estate agent and can help keep the cost of closing on your new home as low as possible. If you have additional questions about the closing experience, about buying a home in the greater Louisville area or in southern Indiana, please make sure that you reach out to us at symphonyrealtygroup@gmail.com.